I'm Deborah Ishihara, and this is Talking Work. ESG has become a key focus for lots of organisations around the world. Those in the EU will now need to keep up with the Corporate Sustainability Reporting Directive, which came into force in January this year. The directive goes well beyond environmental and climate change reporting and includes things like respect for human rights, anti-bribery and corruption, corporate governance, and diversity and inclusion. The big idea is to foster transparency so that investors and stakeholders have access to the information they need to really work out how a company functions in terms of its ESG. A couple of my colleagues recently had a Q&A session about this that I'll share with you now. Diego Paciello from Ius Laboris Italy asks the questions, and Joanna Mackey from Ius Laboris Ireland gives her answers. Have a listen. Welcome to Talking Work, the employment law podcast by Ius Laboris. In each episode, we invite a different guest to discuss what's happening in the world of work. If you're an HR professional of any kind, this podcast is for you.
Hello, Joanna. So, what does the Corporate Sustainability Report Directive do and why has it been introduced?
Hello, Diego. Yes, the Corporate Sustainability Reporting Directive, which I'll call the CSRD for ease in this podcast, came into force on the 5th of January 2023. It builds on the framework of the EU Non-Financial Reporting Directive, which established a minimum level of sustainability reporting obligations for certain companies. The CSRD introduces more detailed sustainability reporting requirements, with required disclosures going beyond environmental and climate change reporting to include social and governance matters, for example, respect for employee and human rights, anti-corruption and bribery, corporate governance, and diversity and inclusion. According to the European Commission, the new rules have been introduced to create more transparency about the impact of companies on people and the environment. They've also been introduced to ensure that investors and other stakeholders have access to the information they need to assess investment risks arising from climate change and other sustainability issues.
Joanna, I understand that more companies are going to be in scope on the CSRD than in currently the case under the EU Non-Financial Reporting Directive. Is that right?
Yes, that's absolutely right, Diego. The CSRD expands the number of companies who will need to comply with the new reporting requirements. So currently, companies subject to the EU Non-Financial Reporting Directive are still in scope, and broadly, these are large entities of public interests. So listed companies, banks and insurers with more than 500 employees. However, under the CSRD, these reporting obligations are now to be extended to large companies, even if they are not considered as public interest entities, listed small or medium-sized enterprises, but that excludes micro enterprises, and also importantly, companies based outside the EU, which have activities within the EU and meet the criteria in terms of size, also fall within the new requirements. It's estimated that the CSRD will apply to approximately 50,000 companies, which is a significant increase from approximately 11,700 companies currently required to report under the EU Non-Financial Reporting Directive.
Wow, that's a big increase. What is the timeline for complying with the new rules?
So, member states have 18 months to transpose the directive into national law, so by July 2024. They may implement the CSRD differently, so it's important to verify how the CSRD applies at the relevant national level. The application of the CSRD will take place in 4 stages. So, public interest entities that are already governed by the EU Non-Financial Reporting Directive should report on financial year 2024 by 2025. Larger companies that are not currently subject to the EU Non-Financial Reporting Directive should report on financial year 2025 by 2026. And listed small or medium-sized enterprises should start reporting on their financial year 2026 by 2027. And relevant non-EU companies falling within the rules should start reporting on their financial year 2028 in 2029.
Joanna, how will these companies have to report information?
So companies in scope will be required to report the CSRD sustainability information annually in their management reports according to EU mandatory standards, which are in the process of being developed and standardised. The sustainability reporting will also be subject to an external audit. So as part of the report, companies will have to report on how sustainability factors such as climate change or human rights issues affect the company, and also how the company's activities impact people and the environment.
Joanna, you mentioned earlier that more employment and diversity and inclusion matters need to be reported under the CSR directive. What role do you see HR directors having to play in the reporting?
So yes, certainly more employment information needs to be disclosed under the CSRD, and HR managers will be closely involved in the preparation of the annual sustainability reports. So HR managers will basically be the guardians of the social elements of the ESG reporting. The exact details of the reporting standards have yet to be determined. However, they will specify information that companies need to report on matters including equal treatment and opportunities for all, including gender equality and equal pay for work of equal value, training and skills development, the employment and inclusion of people with disabilities, measures against violence and harassment in the workplace, and diversity, working conditions, working time, adequate wages, the existence of works councils, collective bargaining, including the proportion of workers covered by collective agreements, and the information, consultation and participation rights of workers and work-life balance. So as you can see, Diego, quite a significant amount of employment information. And also, as there is an annual reporting obligation, thought will need to be given to the systems that can measure, collect and audit the required data, which is likely to go beyond available HR data.
Joanna, reporting on environmental issues will fall outside HR's remit. However, will HR manager be involved in reporting on any governance issues?
Yes, they absolutely will. So HR managers will be involved in the reporting on the composition of and diversity within the board of directors and management, the remuneration policy, in particular the variable remuneration of directors and management, and the extent to which it is linked to sustainability objectives, business ethics and corporate culture, including anti-corruption and anti-bribery, and the protection of whistleblowers. I should also mention that the CSRD requires the management of the company to inform its employees and its representatives on how sustainability information is collected and how it is verified in compliance with workers' rights to information and consultation. So HR managers are likely to play a key part in this as well. But it's likely, Diego, that a transparent and positive reporting culture could potentially provide a competitive advantage for companies in attracting and retaining talent.
Well, it's clear, Joanna, that HR directors and managers will have an important part to play in the new reporting requirements. What are the next steps for companies to think about, Joanna?
Well, if they're not already doing so, companies should review the CSRD to determine whether and how it may apply to them and what they need to do to prepare. Companies should also review the roles, resources and expertise of their legal and compliance functions, who will play a key part in addressing the new CSRD requirements. And that obviously includes the HR managers who will be involved in the various reporting aspects that I've mentioned.
And now can companies find out more, Joanna?
Well, if companies or HR managers want to find out more, there's an article on the CSRD on the Jus Laboris website. Of course, our teams across the Jus Laboris network are also available to answer any questions, and that includes in relation to the M&A perspective of the CSRD, particularly in relation to the CSRD requirements being key for buyers assessing a target company's performance in the pre-acquisition due diligence process.
I hope you found that useful. We'll no doubt be talking about this a lot over the next few months. Meanwhile, we've put Joanna's and Diego's details in the notes along with mine. You're always welcome to contact me on anything to do with employment law and I'll answer your query. Or if you need an expert in a particular country, say, I'll put you in touch with the right person. Do browse around our website, by the way. There's loads of information there on all sorts of employment-related topics at uslaboris.com. Thanks for listening and join us again. That's it for this episode of Talking Work. But we'll be back very soon with more insights from our guests from around the world. If you've enjoyed this episode, don't forget to subscribe to the podcast. You can also visit uslaboris.com to access all our content, resources and tools.